Focus brought to you by IG, taking a look at gold prices recently surging past $2,000, what that could mean for a slew of markets, but primarily the US dollar, as gold and crude oil prices are so often tied to USD, and for good reason. I mean, one, gold and crude oil prices are primarily priced in USD, and so there's this baked in theoretical argument that what's good for gold or crude is bad for US dollar. And we'll put some data behind that in just a second. But also conceptually, gold is a little bit of a competing force with US dollar in terms of where people want to put their investment capital. And we'll dissect that a little bit further. But first, I want to show some of the correlations. And then I also want to tell a little bit of a story, the backdrop for gold price action recently, because it's getting very comfortable at these $2,000 highs. You can see the red line there. Gold prices not necessarily ripping through new all-time highs, but definitely comfortable, like I say, above $2,000. More on that in just a second. But first, highlighting this negative correlation. And what we mean by negative correlation is when one market moves up, the other one tends to move down, and vice versa. It's by no means a rule that says these markets have to move in opposition, but the data here showing that negative correlation, just broadly speaking. You look at 2022, one of the historically best years for US dollar performance against the yen, the pound, the euro, and so on. And considerable downside in gold, went from being above $2,000 to all the way below 1,700 at its lows in October of 2022. And then you look at 23, and you see gold bounces back all the way up to $2,000, and USD comes off of its highs. So there you have almost the anecdotal evidence. And then recently you have gold, like I say, getting comfortable above $2,000, and dollars moving to the downside once again. There's your anecdotal evidence. Here's some harder evidence. This is the actual correlation at any point in time between gold and US dollars for the last decade plus. And a couple of things. One, the correlation has not even flashed green once over the course of the last 10 to 15 years almost, which is pretty wild, especially when you're talking about two different asset classes. Rarely do you see such, the word for it would be strong correlation to the positive or negative side, to the point where over 10 years, it doesn't even flash in the other direction. There's not even one-off event that caused the dollar and gold to crash or rally together for an extended period of time. Two, and I thought this really, really surprised me, genuinely surprised me, that in 2023, we saw some of the most negative correlations between these two markets that we have in the last decade. If anything, I was kind of ready to put together this graphic and have it show that recent correlations have actually not been that far negative. Recently, maybe gold and dollars have been more uncorrelated than they have been negatively correlated. Not the case in the last year. Like I say, some of the most negative correlations, they're lower than negative 0.5 for some of the only instances since 2012, 2013, there were some flashes down there. 2018, 2019, there were some flashes down there. But pretty much for the entirety of 2023, showing some stark negative correlation. And so what that means is this has actually been the last year or so, some of the strongest inverse relationships we're seeing between gold going in one direction and dollars going in the other direction consistently. Now, a couple of things on that. Correlation doesn't account for magnitude. And so if gold in a given data point moves up 20% and dollars move lower by 1%, that's going to actually kick out the same correlation as if gold moved up 20% and dollars moved down 20%. So you're not getting that magnitude piece in there, but it does show you that consistently over the course of all the data points of the last year or so, they have been consistently in the opposite direction. Very surprising, like I say, to see out of the last 10 years plus some of the most extreme negative correlations there. And now here's a little backdrop on gold, because you might not be reading so many news stories about gold these days, because it hasn't necessarily gone from its lows of the last year around 1800 or its lows of the last couple of years closer to 1600, or the lows of the last 10 or so years even below 1500. There, we'll show more data on gold in just a second, but it has been hanging above $2,000 not only for the entirety of 2024 so far. It's January 9th and gold has not traded below $2,000 yet this year, but it's actually been above $2,000 for the longest stretch in its existence of trading for the last 20 years plus. And it starts to beg this question of, could this recent strength be a new normal for gold? It definitely feels like out of the 3 or 4 instances that it's traded above $2,000 going back to the pandemic in 2020, this seems like the realist potential situation of $2,000 gold to be more normalized than, say, in 2020. It gets up to $2,000 for all of a couple of days and then falls all the way back to close to $1,600 by the spring of 2021. And you can see, going back the last 10 years, gold has traded as low as $1,200 and even lower there in 2015, 2016 range. So a lot of ground to potentially cover to the downside. Could have essentially lose 50% of its value and be at relatively normal prices over the course of the last 10 years. But why I say this one feels a little bit differently is, one, like I say, haven't traded below $2,000 here in 2024. And 2, has spent now 17 trading days in a row above $2,000. And that's the longest stretch of gold prices being above $2,000. Of the handful of occurrences of gold trading above $2,000, it is on average been above $2,000 for 5.25 days before reversing back below $2,000. Now, like I say, the longest stretch, 17 days above, and has people wondering, myself included, will it trade below $2,000? Again, of course, anything possible, but seeming more normal by the day, for lack of a better term there. So what's this all mean for the dollar? Showed that inverse correlation, showed that gold has been close to its highs and very comfortable near its highs. So that should mean downside for USD, right? Well, it depends, because you look at the last several years here for dollar yen, essentially the same time frame that I just showed you for gold, and you say, well, Frank, this isn't a down a few years for dollar at all. Dollar versus yen is actually near historic highs. And just to flash back and forth to show you, going back to around 2015 here in dollar yen, dollar obviously closer to those highs of 150 than it is its lows of 100 even over that time frame. And gold actually looking pretty similar over this similar time frame. So wow, Frank, do you just debunk your whole thing here? Not exactly, because you start to tie the dollar to some other currencies like the Swiss franc, for example, and the dollar is showing that stark inverse correlation, negative correlation to gold. in spades. Dollar Swiss franc near its lowest prices since 2015. So the flip side of that dollar yen story is the dollar franc right there near its lows. And I went through and crunched the gold correlations to each of these specific forex pairs, because what we looked at first was just dollar versus the basket of euro, yen, pound, franc in there as well. But now I broke it out to the specific pairs, and you can see it actually differs pretty considerably. The most negative correlation being to the dollar when it's pitted against that Swiss franc. But right behind it there is euro and Australian dollar, which you might expect given that the Australian economy is actually pretty closely tied to gold production. And now you're starting to see that relationship take place and maybe start to get some ideas of, okay, well, if I was looking for long gold type strategies, then maybe that dollar franc getting short the dollar versus the franc, or getting short the dollar versus the euro, which effectively be a long euro dollar position. That could be a good proxy for that. And on the flip side, if you're looking for short gold positions, you would want to be long the dollar given these correlations. Now, of course, it has to be said again that correlations aren't guarantees of where these relationships are going to play out in the future. We could, starting tomorrow, go on a stretch of dollars and gold moving in the same direction forever. Anything can happen. But given these historical relationships, gold and dollar, negative correlations. And so if you wanted to be long gold, you'd want to be short dollar. If you wanted to be short gold, you want to be long the dollar. And the dollar versus the franc having that strongest correlation of the bunch. And now you're starting to see what you would expect, that flip side of gold here, showing the more historical prices for dollar versus Swiss franc. Right now trading under 86 and has not spent a lot of time, even rarer over the last handful of years than gold above $2,000. Pretty crazy extreme. Whether you're roping in the gold information or just standalone, I don't think we have a major pair. The euro, the pound, the yen, Australian dollar, Canadian dollar, anything against USD right now that's at such an extreme. They've seen those extremes. Obviously, euro got down to parity recently. The dollar versus the yen has seen a bunch of extremes over the course of the last couple of years. But right now, this dollar versus Swiss franc, like I say, trading under 86 and recently trading under 84, some of the lowest prices going back to 2015 when the Swiss franc was depegged. So historical extremes, some strong correlations between the franc and gold there, and negative correlations between gold and US dollar. A lot to digest, but potentially, a lot of strategy here given these extremes for the precious metals commodity and the US currency.